Amid the bear market, these growth stocks are proving that they can still win. One positive to the bear market: we're finding out which growth stocks to buy. The trade desk has a strong combination of profitability and growth. Salesforce has exceptional operation cash flow, a reasonable valuation, and a strong buyback program in place. DigitalOcean has better than expected profitability, something investors should cling to in this environment. Let's dive in. Here are the three cream of the crop growth stocks to buy for 2023. Welcome to Timely Investment Research. Growth stocks have been under fire since the bear market began. In fact, the sell-off in many of these stocks began well before the overall market peak. But as time goes on and earnings come out, we're noticing some of the growth stocks to buy. That is, we're seeing what the cream of the crop really is. Years from now, we're going to wake up and see a number of stocks trading significantly higher than current levels. Will they be the names on this list? For our sake, I sure hope so. The reality is all sorts of stocks can explode higher during an unchecked bull market. Businesses that have no profits, and some that don't even have revenue, end up garnering multi-billion-dollar valuations. Eventually, we see which growth stocks are worth owning and which are not. Let's have a look. Number 1. The Trade Desk. As the earnings reports continue to hit, the Trade Desk has proven to be a name that investors want to own. Co-founder and CEO Jeff Green has built one heck of a company, one that continues to generate solid growth amid a very difficult operating environment. Despite the pressures Meta and Alphabet are seeing, the Trade Desk continues to execute at a high level. The company recently delivered an earnings beat and basically inline revenue results. Sales grew 24% year over year. To be growing the top line in an environment like this is quite impressive. And then investors remember the Trade Desk is actually profitable, with solid growth and positive free cash flow. Analysts also expect positive earnings and revenue growth this year and next year, which is nothing to scoff at in this environment. The valuation is a bit rich, but this is one to buy on the dips. Number 2. Salesforce. For months now, I've been pounding the table on Salesforce. For technical reasons, I wanted the stock to fall just a bit further, down to about $120. But from a fundamental perspective, it didn't need to. In fact, this growth stock became so undervalued it drew in 5 activist investors. Just this week, the company delivered a robust earnings report. Earnings and revenue topped analysts' expectations, while management's first quarter and full-year revenue outlook topped consensus expectations. Salesforce delivered strong operating margins and announced a fresh $20 billion buyback plan. Clearly, it has found its stride. While the stock has rallied quite a bit off the low, up about 53%, I believe we can look to buy the dips in this name. That's as shares are still 40% off the high. Shares currently trade at about 30 times this year's earnings. However, it could be a bargain on a deeper decline as Salesforce cements itself as a top growth stock to own for the long term. Number 3. DigitalOcean. I might end up being wrong about DigitalOcean, as I have been a bull for the last several months. The growth story may not pan out and margins may erode in the future due to competitive pressure. So far, though, the company continues to do pretty well. The company's recent earnings report was a top and bottom line beat. However, its first quarter and full-year revenue outlook was slightly below analysts' expectations. On the plus side, its earnings outlook for both timeframes were above expectations. Particularly for the full year, management guided for non-generally accepted accounting principles earnings of $1.65 to $1.69 a share versus estimates of just $1.16 per share. That's a massive earnings beat, even if the company did deliver a shortfall in revenue, and it wasn't by that much. At a time like this, I would like to know that the companies I own can generate cash flow and profit. Ultimately, that's what matters, even if growth stock investors are often willing to sacrifice profits for sales growth. While the stock has been absolutely trounced, the same can be said for many growth stocks. Despite the beating, I believe DigitalOcean stock has a large long-term opportunity. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.